we are very excited to have all of you. And I hope you're having a good morning. We are so excited today to have you all join us for yet another exciting session on corporate governance. So my name is Soni Anangasa, as earlier mentioned, from SME Outreach. My role involves more following up and guiding founders who are interested in joining SME Founders Association. And in today's rapidly evolving business landscape, we find that SMEs face unique challenges, one of which is navigating the very complex world of risk management and regulatory compliance. For many entrepreneurs, the focus is primarily on growth and profitability, while the mechanisms needed to safeguard that growth are often ignored. Yet, the importance of robust risk management and compliance frameworks cannot be overstated. So I'm very happy that you have all joined us today as we encounter episode 3 of our corporate governance series. We shall delve into learning, amongst other things, how to safeguard your business while staying compliant with industry regulations. Allow me to introduce our speaker for today. That is Austin Atandi Ondaba, who is a lawyer by profession and a seasoned expert in corporate governance. He will guide us through today's topic, which is risk management and compliance for SMEs. And I'm very sure that he will share with us valuable information and answer our questions so that at the end of it all, we are equipped with what we require to help our businesses grow and thrive while remaining compliant. Join me in welcoming Austin Atandi Ondaba. Karibu sana wakili. Let us welcome him with our emojis and make sure we post our questions as he goes along with the presentation. Tafadhali tumkaribishe. Let us welcome him with all our emojis. If you can be able to go and click a reaction there, let us at least make him feel welcome. So Austin Atandi Wakili,
Good
welcome.
morning.
The floor is
Thank you
yours.
very much. Habari zenu?
Nzuri sana.
Thank you. Thank you for the warm welcome. I'm excited once again to be here today to have a discussion with entrepreneurs on matters corporate governance. As usual, we this is a roundtable discussion, not a lecture. So I'd prepared some slides for sharing, and Sonia, perhaps you can assist on that. Or Clement if possible. But generally what I want us to do is just have a discussion, understand. I think over the last 2 episodes, we've talked about what corporate governance is. We've gone deeper and seen the forms and the structures of corporate governance. And today we want to talk about risk management and compliance for SMEs. So technically, what we're going to look at today is how does corporate governance play into the management of risk, the assurance of compliance, and eventually the smooth running of an SME, so that you as an entrepreneur goes back home and you can have a full night sleep knowing that your business is well set for the next day. You're not going back home and wondering, okay, so tomorrow will Kanjo visit or not? Will the career guys be here again or not? So basically what we're going to look at today is what risks are we likely to face as entrepreneurs, and then how do we have these risks mitigated by corporate governance and good corporate governance, because there's good corporate governance and there's bad corporate governance. So this topic essentially is trying to gear and direct you towards good corporate governance for your business, however small the business is. Very few slides I have for you. Remember, we don't have much time, so let's go on. The overview, that is slide 3, we are looking at the concept of risk management, so just understanding it. And then how do we build a robust framework? Of course, building a robust framework means you are gearing yourself towards regulatory compliance. And the question then becomes, is it a necessary evil? Is this compliance really necessary? That's a question that we ask ourselves every so often as entrepreneurs. Every day you wake up and you ask yourself, do I really need to pay KRA? What if I don't pay them? I mean, this money I'm paying them is too much. My entire 30% of income is going to them. So do I really need to pay them? Then how do you integrate risk management and compliance? We'll have if we have time, we'll go through case studies. As a welcome note, I'd just want to note that SMEs world over are the backbone of commercial activity, business, economies. What drives economies is not the big enterprises we see. It's not the Safaricom's and the BATs and it's not those EABLs. No. It's you and I. You and I who have small turnovers. You and I who are pushing 20, 30 million a year. Very small. You and I who are pushing 0 to 5 million shillings a year. That is basically where the bulk is. That's the 80-20. I don't know if we know the 80-20 rule. The 80-20 rule is basically who is contributing the 80 and who is contributing the 20. So in most economies, the 80 is contributed by SMEs. The 20 is contributed by the big corporates. How does it work? So they're the backbone of many economies, and their success often depends on effective decision-making and risk management. Last week, or in our last session, we looked at the challenges of having KRA tax agents visit you. We looked at how ineffective, in other words, how poor decision-making eventually affects the running of a business. So effective risk management and compliance is essential for SMEs. And in this presentation, we're going to explore the various governance options available to SMEs, the advantages and disadvantages, and how that can impact the decision-making process. Of course, by understanding these structures, what happens then is, as an entrepreneur, you make informed decision. No, you have the latitude to explore various angles from where you sit, and therefore giving your business a wider berth in terms of landing. So let's understand risk. What is risk? I'm sure for whatever we do, wherever we are, we have those live threats. Every day you wake up, you're gonna drive from home, you're gonna get into a matatu, you're gonna drive, you're gonna ride a bike or a motorbike or whatever. You're gonna commute from wherever you are, which is your home, to the next point, which is presumably your point of work. Now, in that commute, there's a threat. There's a threat. God forbid you get into an accident, motor or none. You could be working from home. So you're walking from your bedroom to your living room and you trip and you sprain an ankle. It's a very live threat, Now, a risk is a potential threat to a business's objective. How is you walking from your room, from your bedroom to your living room, if you're working from home, before you sit on that computer, you sprain your foot or you trip and you end up banging your head on the table, or spraining your foot or whatever it is? How is that a risk to your business? So if you're a one-man show entrepreneur where you are the baba and mama of the business, you can imagine what that sprain does. It means you have to be rushed to hospital. Effectively means your business won't run for the day. Now, if you are a small enterprise that has, say, 0 to or 1 to 10 employees, but you are the boss, these 9 people rely heavily on you to make decisions on a daily basis. And these decisions then are the ones that drive business. Now, if you're unable to show up for that day, and if you've not put in proper corporate governance structures, then your business is at a standstill. Because they'll wait for you. They're used to seeing you check in at 8 a.m. It's 10, you've not checked in. They don't know you tripped or you sprained your foot, so you're in hospital. It's 11 a.m. They need to make decisions. Deliveries need to be made. You're nowhere to be seen. Probably you left your phone as you were being rushed to hospital. So they've been calling. Clients are getting agitated. Bills can't be paid. Checks were to be signed. The bank is calling. Payments are due. You are on the hospital bed being sorted on your sprained ankle. But because you didn't set up proper structure, you didn't delegate to a number 2 and a number 3 and a number 4, such that if you're not there, the number 2 is able to quickly, swoop in and pick up from wherever you are. If the number 2 is not there, then number 3 is able to pick it up, build them, empower them. So the types of risks, and from that definition of risk as a potential threat to a business objective, we are going to explore the various types of risks. And these risks, basically, we're talking about business-related risks. The first one is operational. Now, operational risk is the day-to-day. For instance, the example I've just given, you've sprained your leg, you're on the hospital bed, your phone was left in your house, they can't reach you, they don't know what has happened. The operational risk now is they are unable to make decisions because you hadn't empowered them. And even if you had empowered them, maybe there are things you need to do by yourself to enable some operations go on. So operational risks come about that you, who is running the business, has tied yourself up to the running of that business operationally, that your absence is actually a risk. And in corporate governance, what we're trying to say is this: however small your entity or your enterprise is, try your best to have 1, 2, 3 other people understand it. You could be a one-man show, but there's that 1 or 2 other people who, in one way or the other, have or in their, in your daily operations, interact with you or your business. Try to make them understand how that business runs. Try to mitigate risk. I will not want to belabor the point of operational. Financial is what we all understand. So again, you who runs an SME, and for the sake of this discussion, I'll use small SMEs through and through because that's who we are. Financial is you took an M-Shwari loan. Maybe you were lucky enough, they gave you about 100K and you pumped it into business. Or even at the start of the business, you went to the bank, borrowed $1 million bob, and you put it into the business. Now, in your convoluted way of running your business, you have tied up your financial personally. So you have the personal finances and you have the business finances. So you have convoluted the two, that there's no separation. No one can tell that if you bought tomatoes yesterday night for your dinner, was the money from the business or was the money from your personal account? Do you have a separation of these two? Does your business have its separate account registered in the name of the business? Do you have a personal account that you pay yourself into on a monthly or a weekly basis, or even a daily basis for those who pay themselves daily? To the extent that you can always track and say, in September, I paid myself 10,000 bob out of what the business made. And you can clearly see the 10,000 bob moved into Austin Atande's account at whatever bank. And X amount remained in the business account. I don't think I can break it down further than that. Reputational is purely what you do with the third-party people, third-party suppliers, third-party financiers. You know, we all have, in one way or another, people who surround us as we deal. You have financiers, you have your suppliers, you have your clients, you have your employees. What is the reputation that is preceding you out there? Is it that Austin si mtu wa kulipa deni, hata usijaribu compare, you know? Or is it that if you give Ondaban partners this amount, for sure you'll have it back? You see, those are two different angles. There's the aspect of Austin as a person, and then there's the aspect of the business. Such that if your business has a good reputation in settling its debts, in delivering for its clients and whatever is expected of it, that reputation then stops being a risk, becomes an addition, an additive to the running of your business. It's a positive effect. So it stops being a potential threat then and becomes a positive effect on your business and to the overall running of the business. Strategy. Are you looking into the next 2-3 months of the business? Are you looking into the next 6 to 12 months? What is your plan for next year? Because then, if you don't know how January is going to be, if you haven't sat down to project, to focus and to say, now, last year, January, we made this much. Last year, January was just a few months after the elections. How was the business cycle? Now, next year, January, will be 3 years after the elections. What are we likely to see? What are the anticipated effects on the economy? So that is the strategy you have to take and you know, sit down with your team and factor into your sales, into your expenses. And because you live in an environment that has almost predetermined cycles, election, weather, how are you planning for this? That is the strategic angle. That if elections were to be held tomorrow, and you well in advance knew that these elections were held or will be held, what was your strategy towards mitigating any financial impact of that elective period on your business? So strategy. Legal is basically the day-to-day, what we talked about last week. you have permits, you have returns and filings of various government agencies, whether it's Sharia House, whether it's KRA, you're expected to file these returns. You have employees. Do you have proper labor contracts with them? We all know those scenarios where you had this guy who's been working with you for the last 3 years. You pay him something every month, but you've never solidified this relation into a proper contract. There's no written arrangement on how you guys are dealing. In the 4th year, the guy leaves, gets another venture elsewhere, and at the point of departure, he realizes you've not been remitting his statutories, KRA, NHIF, or SHIF, I don't know what it is now. And the guy comes back and asks you, boss, I thought you were remitting my pay. I thought you were remitting my health assurance, my pension. Then it becomes a labor issue. He reports you to the nearest labor office. Now you are in a battle where you have to look for money to cover for the outstanding arrears. Probably a person who was in, or you were in good books with, is now an enemy of sorts because you've not been, fulfilling your obligations to them. So those are the legal threats. That do you have a proper lease with your business landlord? So at all times, have that dashboard, however small your business is, have these 6 factors, and always try and extrapolate that what is the operational, the financial, the reputational, the strategic, the legal, and the environmental risk. If you're running a small duka, wherever you are, or a kiosk, around you, for instance, you have a kiosk around a bus stop or something, you have to be aware of your environment. What are the risks? I mean, if one day a bus loses its ability to brake properly and rams into a kiosk, and the employee you had left there is then either injured or, God forbid, loses their lives, what are the risks? What are the potential legal hurdles you're going to face out of it? Is there insurance for it? Are you covered? Or does that entirely wipe out your business? So let's be very conscious of these 6 factors, because these 6 then help you navigate your business in various forms and identify potential threats that then you're able to foresee, plan, and mitigate well in advance. The next slide, I think, is on the impact of risks on SMEs. Now, from the 6 factors that we've looked at, there is a number of issues that come up, and how they impact SMEs. So we have an issue of limited resources. They have an issue of smaller market share and a very narrow stream, of revenue, so that as a business, you're only depending on one line of either service or goods to generate revenue and therefore to meet all your expenses. Let's look at limited resources. These are very common, factors in most in businesses. That you start your business, it requires probably 3, 4, 5 million bob, but you can only raise 1 million. So what you're doing is you're shuffling and juggling balls in order to sustain this small capital that you have for your business to continuously run. And out of this small, capital that you could afford, you therefore have a very small market share. An example, in our homes or wherever we stay, we have these mama mbogas. And nowadays they've diversified. We even have they do household items, so even food stuff. I see them even on Kokoteni nowadays. Some of them even have small pickups, and they will come near estates and park, by the gate. So initially, it used to be these handmade carts, or Kokotenis as we know them. And it was young guys, you'll see them either with sugarcane, tomatoes, onions, because they've understood the market. So they know you have no time to go to the market. You leave and go for your gig in the morning, come back at 5 or 6. You're too tired, but you gotta have, you gotta have some dinner. So you'll buy whatever you have to buy from just the convenience. Now, smaller market share then comes into play in this way. This guy with a hand cut is challenged by the person who comes in with a small pickup a few weeks down the line, selling the same product. Now, the guy with the pickup eventually sweeps off all the clients because he has diversified. He has bigger room, and therefore he picks up a bigger market share from the same pool of clients that the hand cut guy used to have. So you see, if the hand cut guy had thought through his processes and probably diversified, maybe even have 2 or 3 hand cuts selling different items, I don't think the pickup guy would have a chance on him. But because probably he stuck to his onions and tomatoes only, while everyone kept asking, can we have coriander? Can we have garlic? Can we have... So the pickup guy comes in because he has more room. He has all this diversity of items that you, who wants convenience, doesn't need to walk far. Umeshuka matatu, you jump onto, you walk towards his pickup, get his stuff. Sometimes even they offer to deliver. That is what diversification does. It grows your market share. And in effect, it grows your resources. So it's like an interlinked, an interlinked, an interweb of factors that your resources, however limited, spill over to limiting the market share that you have, and eventually limiting the number of, or the avenues of revenue streams that you can have. So how do we build then a robust risk management framework? Number one, you have to identify the risk. You can't deal with something you don't know, so you have to identify it. You have to determine that this is the risk. That my risk is the fact that I don't have a business permit, yet I'm opening my shop every day. Then you have to evaluate it. Assess it. How do you assess it? What is the impact of you being visited by Kanjo guys, ask you for a proof of permit, then find that you don't have it? What does that do to your business? That's the assessment you do. And then mitigate it eventually. So you know that if those guys walk in, your small shop will be shut down. Probably we know how crooked they are. And I'm not generalizing, but we know how sometimes kanjo guys are. They will come in, watakuchota, they'll carry you and your wares. You will spend a whole week fighting out legal battles at the county court or at the city court. Spend money that you didn't have, or for budget no, that you hadn't budgeted for. So then you realize that a permit that will have cost you 7,000-10,000 bob, plus maybe another 5 or 10,000 in facilitating the process through a lawyer, you've ended up spending 30K later on fighting court battles that would have been avoided from the word go. So mitigate that risk. And nowadays, that thing is digital. You know, you log in, prepare your paperwork. If you have instances of, I don't understand what I'm doing here and there, consult someone. Get the paperwork done. Get the paperwork commissioned if it needs to be commissioned by an advocate. File it in and pay. At the long run, it will save you a lot of headache, unnecessary loss of funds and budgets that you didn't have, you know. How do you risk monitor and review them? Continuously assess. I mean, markets change. Laws are repealed. They are amended. What are the latest requirements from either the county or the national government? So continuously risk, monitor, and review, because that is the only way you stay ahead of that curve. Otherwise, the curve catches up with you and you end up spending and losing unnecessary resources. Now, I have in the past asked SMEs whether compliance is that necessary evil, because as you know, as entrepreneurs, we tend to think that I can avoid this for now. You know, I don't need to file my returns now. I'll file them towards the end of the year. You know, I can delay this tax payment and sort it later on. I can avoid this business permit, and if these guys come, you know, tapambana nao vile watakuja, tutawachotea kakitu. The long-term effect of that non-compliance is very expensive, because if you were in my class last week, we discussed the effect of investment and how rolling it backwards, how good corporate governance builds up to the growth of a business and the possible investment by third parties and the possible good relations with your financiers. Because remember, as an SME, there are key parties who you always look up to. Either a very good relation with your financiers or the possibility of investment by a third party. You know, the third party could be you. It doesn't have to be someone from the moon. It could be you. You have this small enterprise that you're running, and you have your 8 to 5, but you have your small gig that's running, a side hustle that's running somewhere, and you've employed one of you or two other people. And if there's proper record that this business is, you know, making headways and, you know, there's potential for growth, even you as the owner could invest more. So it's not a miracle. It could be you, that you are the financier, that you are the third party investor. But there's also the possibility of having someone else identify your business and tell you, okay, we've been monitoring what you guys are doing. We'd like to come in and, you know, work together. So that compliance has long-term spillover effects, because if that third-party investor comes in, some of the key questions, very simple things they'll ask for. Share with us your 3-year financial statements. That's when you realize you've been in business for 5 years. You've never prepared books of accounts. You've never audited yourself. You never filed tax returns. You have never filed BRS, business registration services returns, for the corporate entity or for whatever you're running. You've never paid permits. You see, at that point, it becomes impossible for you to even justify a case for investment. So regulatory compliance is a necessary evil. That's my take. It's a very necessary evil. It's that thing that if you are to compare it to a human, it's like the effect of a shower, a good meal, and sleep. We all know what those 3 things do. A simple shower or a bath, a good meal, and a complete rest, and a proper 8-hour sleep. We know what that does to the body. It's the same thing for your enterprise, that you have proper records, that you have mitigated your risks, and that you have an anticipation of where the business should be. So the importance then is you avoid unnecessary legal penalties, just as we discussed. You maintain your reputation. You ensure ethical operations. We all know that Kenya is considered a hub for investment. If you read, there's a report that came out, I think it's 2 months ago, and they were showing the amount of investment that has been done in Africa in startups. You realize that Kenya is actually taking the bulk of that investment. That shows you how much business is happening in this country. But it also goes to show you that SMEs are sort of rising up to the challenge and meeting the criteria of these investors. So don't be left out. Keep proper records. Ensure you have the right permits and licenses. And ensure you know where your business is headed. Have a strategy paper. A strategy paper is not a miracle. It could be even a 1-page chart where you've just mapped out and said, sales-wise, we were here in 2021. We want to be here in 2026. Employee-wise, we were 10. We want to be 30. We want to have everyone registered for statutory requirements. We want to have everyone under pension. We want to have everyone under medical. We want to have an employee ownership plan, an ESOP. Because what an ESOP does then is it opens up opportunities for your employees to own shares. Regulatory-wise, we want to file our returns. We have filed our tax. So just have a small chart. It could be a 1-page document that sort of guides and steers you and helps you reevaluate where your business is and where your business is supposed to be headed. So common regulatory challenges for SMEs are issues like labor. I gave an example where you have set up a business and you hired this young lady, young man, and 3, 4, 5 years down the line, they're leaving. Then you realize you've not been doing the right thing by them. It becomes an issue. You end up in the labor court, spend millions compensating them. Completely unnecessary. Whereas you could have had a simple employment contract drafted by a lawyer at very minimal costs and avoided this labor court 5 years down the line. Environmental, I think we discussed this. Data protection, this is a new concept for SMEs especially. And I know we've all been seeing the reports of how the ODPC, the Office of the Data Protection Commissioner, is slapping people fines, left, right, and center. As an SME, compliance to the Data Protection Act is a must. It's not an if, it's a must. Why do I say this? I'll give you an example. And I prefer examples because they are real. You are an agency, small time agency, 2, 3, maximum 5 employee agency. What do? You probably do marketing or PR or whatever it is. So in your small team of 5, you have created a very nice portfolio of niche clients that you're serving. Probably have a maximum of 5 corporates you're serving, or even just 10 small other SMEs that you're serving. You're handling their digital marketing, or even you're a booking agency. So what happens? You are collecting their data on a daily basis. They're telling you, oh, I'd like to fly to Kisumu for this. They send you their passport, ID, M-Pesa. You're collecting their data on a daily basis. Now, 4, 5, 6 years down the line, your business is well established. One of your computers gets hacked into or gets stolen, unfortunately. And whoever does this accesses this data. They access the data, and what do? They start sending whatever parties they found random messages. I'm sure you've all received those spam messages. That's one example. Second example is through this data you're collecting, you've not signed non-disclosure, you've not signed any engagement documents with the third parties that will indemnify you in the event that data is breached, their data privacy is breached. You end up in unnecessary legal battles. I'm sure we've seen the fines that were slapped on entertainment joints. I think that was earlier last year or mid last year. We've seen schools being fined for mishandling the data of students. So data protection is currently one of those topics you cannot avoid as an SME, because eventually it's going to catch up with you. So you'd rather be ahead of it. Talk to a data protection specialist. At Ondaban Partners, we have a specialist who does data protection. What we do then is we come in and create policies for you. We register you and get for you the certificates because they are a must, they're a requirement, and just that this ODPC office is not yet fully empowered in terms of resource. But I can assure you, in the coming years, once this office grows its portfolio and has a bit more resources, they'll operate like Kanjo. Not in a bad way, but they'll have the ability to bite. Because they'll be walking into offices and asking you, where is your data protection certificate? So consider this, because it's one of those policies or guidelines that each SME will rather have than not have, because of the cost implication if you don't have. Industry-specific regulations, depending on what you're doing, you're in manufacturing, you're in agriculture, you're in whatever it is, education, there are those industry-specific regulations that you are supposed to adhere to. That you must have certain permits from either the Ministry of Education, you must have clearances from the Ministry of Mining, permits from the county government. It won't cost you much to actually consult an expert, an accountant, a tax advisor, a lawyer, and tell them, just do for me a simple advisor on what you think our business does, the kind of permits we need, what the industry requires of us, what government requires of us, the expectation to a third party. It's a very simple ask, and it won't cost you much, because then that expert, that tax advisor, that accountant, that lawyer will do for you a simple 2-3 pager and give you the highlights that these are the things to watch out for. You'll be shocked. A simple 50K spend on that expert will save you millions in the long run. Very well. Integrating risk management and compliance. So the culture of compliance is basically a mindset issue. And Kenyans, we are horrible because we you know, you drive on our roads and you see how we behave as Kenyans. It tells you who we are as a people. It tells you our mindsets. You're driving on a highway and the car ahead of you, you see someone throw out a bottle, a Dasani bottle or a Keringet bottle or a packet for, an exhausted packet of yogurt. You're wondering, is it a monkey that is in that car or what? Because how do you just throw out your dirt onto the roadside without a care in the world, You finished your maize cob, unafungua dirisha, unatupa nje. It's a mindset. It's a culture issue. And this is something that we can train ourselves, because just like dogs, even humans can be trained. You train your child, let them know that throwing dirt and rubbish all over the place is not good. It's always good to clean up after yourself. If you are seated in a matatu and you see this person open up a window and they want to throw out that empty bottle, talk to them. It's the same thing I say, the matatu driver and the conductor are not the problem. It's the 14, the 21, or the 33 people who are seated in that matatu quietly, watching this driver swing on the highway like a monkey, endangering the lives of you, the passenger. Yet you sit there quietly, rapturing your eardrums to loud music. Yet the 33 of you say nothing. And then when there's an accident, you see them on TV as witnesses. Oh, you dereva hata alikuwa anatafuna mira. You wonder, why couldn't the 33 of you speak out? What stopped you from actually waylaying this driver, commandeering that car and telling him to park by the roadside, and you are late and you ask for your refunds? And you tell him and the conductor, you know what? Seems the two of you are very keen on killing yourselves. You guys go ahead, as we'll grab another matatu. It's an issue of culture. It's a mindset issue. Stand up, speak. When you see something is going wrong, stand up and speak. It's the same thing with compliance. Change your mindset and gear yourself towards a compliant culture, that you won't drive around without insurance on your car. Because will you walk outside your house and go to the office without shoes? Will you walk to your office naked? So why is it then that we will allow ourselves to be misused by third parties? So it's a mindset issue. It's without belaboring this point, and it's a very touchy point for me. Let's change our culture. Let's refine our mindsets. Same thing for employee training. Train your employees Let them know what is required of them. Have round tables with them. Let them see you as one of them, not as a boss. Internal audits, these are very important, especially if an organization that has a number of employees, say 5, 10. What these internal audits do is they show the glaring gaps, whether financial, operational, legal. You can audit yourselves internally, where you cross audit each other, and then you bring in an external auditor to sum it up and wrap it up for you guys and show you where you're going wrong and what you could fix, what you could mitigate, what you could do better. Record keeping. Without record keeping, by the way, and I think I started off this series at the very start, 3 weeks ago, you expect to grow that business. You expect that investor to walk in and offer you millions of dollars, and you have no records. It's akin to expecting food to cook itself in the kitchen while you sit in the sitting room doing nothing. It won't happen. Keep your records, keep them properly, however small your business is. Have your sales recorded very neatly that today I sold 1,000 shillings. My cost of sales was 900. I pocketed 100 as my gross profit. Just have that record. I gave an example, and it was a very live example of a client I have who does shoes and clothes and whatever. And because of records, it was a do or die, because if she didn't have those records, she can't even access a simple facility from the bank. But the fact that there are records, it changes the whole narrative. Tech solutions, we are in a digital world. I mean, yesterday I was reading this report online, and I was seeing that in Africa, the rates of connectivity to electricity, only I think 10 countries are above 80% connectivity to power. Kenya happens to be at 85%. The other 4 or 5 are in the North Africa region. That's Egypt, Algeria, Tunisia, Morocco. I think Ghana is there, South Africa is there, Kenya is there. We're in the digital world. You have no reason, you have no excuse why you shouldn't be tech savvy. At the very basic, you have a smartphone. If not, you have a PC, a desktop. Use the tools. We all do, those computer courses after high school. Use those simple skills to make your life easier. Because after all, what are they for? So that's the use of tech. So corporate governance is, the long and short of it is this. Just like you will manage your personal hygiene, your dietary needs, your mental and social needs, your business needs the same. That you will wake up and do a hygiene check where you shower, brush your teeth, proceed for your nourishment, a proper breakfast, proceed to dress nicely, and leave the house. That you're not walking barefoot to work. It's the same thing for your corporate, for your business, for your SME, for whatever it is you're doing. Pick it up in a way that you have a comparison of your personal life with your business life. Because how you handle your personal life will in most ways reflect how you handle your business life. Nothing new, nothing strange, nothing out of the ordinary. If you can't keep your personal financial records, most likely you won't keep your business financial records. So again, it's a culture issue, it's a mindset issue. Change it. mitigate the effects of that non-compliance, and you'll be shocked the effect it has in the long term on the growth of your business, on your personal growth as well. Case studies, I think we have examples of SMEs that have successfully implemented risk management and compliance practices. I gave an example last week, but we where we sit from your various desks right now, I'm sure you can think of an SME that has successfully navigated growth challenges up to the level where they've got an investment. Think of that SME and wonder, and even approach them and ask for to do a case study on them, because you're not living in a vacuum. You have all these other SMEs out here who are surviving and breaking news, breaking barriers. Why not approach them, make them a case study, come back to yourself and implement what you've learned? I think I don't want to sound like a broken record. Sonny, Clement, I want to push this back for a Q&A session. But our key takeaways today are this: risk management for SMEs, compliance for SMEs is very simple. Look at the 6 factors we discussed earlier. There's the legal, there's the environmental, there's the what was that? Let's look at the 6 of them. Sonny, if you can go to the 5th slide. The types of risks. There's operational, there's the financial, there's the legal, there's the reputational, strategic, environmental. Sit down, create a chart of these 6 risks, evaluate how your small business relates to these 6 risks, or how these 6 risks relate to your business. And whatever you come up with, start looking at assess how to mitigate those. And we are here for you. We will assist. Feel free to reach out. We'll be more than happy to assist. Asanteni sana.
Wow. Thank you so much, Wakili, for all that information. We have really learnt a lot, and let us give him a good round of applause. And perhaps because of time, we may only be able to take 1 or so questions. So for anyone who has a burning question, kindly just unmute and speak, or raise your hand and we will let you speak. If you have any other questions, you can still post them on the chat. And Wakili, maybe you can also post for us your number on the chat so that for anyone who wants to reach you, they can get to you. So that was really informative. I think my take home will be the 6, like we have to go back and do an audit to just understand how we are operating. So we'll take away the operational, financial, reputational, strategic, legal, and environmental to look at ourselves and see where is it we need to be able to reassess and be able to go through the 3 steps that you told us about, identifying the risk, evaluating or assessing it, mitigating it, and finally making sure that we monitor and review as we go along. Very many nuggets today. Thank you so much, Wakili. We have learned a lot. So is there anybody who maybe has a burning question so that we can finish up with that because of time? Kindly, if you have a question, just put your hand up. I'm trying to also look at the chat. No questions so far. So I think we'll call it a wrap for today. I don't know whether you have any other takeaways for us, Wakili, as we wrap this up.
I think I'm grateful. I've seen some consistent names on the participants list. I am hoping they're learning something out of this. And if you at any one point feel you need to consult, I'll leave my contacts.
All right.
The foundation is there for you. That's why it's an association of SMEs. Please reach out. Clement and Sony are there to support. They can also link you with us if need be. We are willing to help. And our strength, our happiness as a team grows from supporting each other. So, asanteni sana, and all the very best in your various ventures. Thank you.
Awesome. So I will just wrap up with a call to action to invite all the SMEs that have been here with us today. Kindly, if you want to be able to get on board with SME Founders, we are an association that is by founders for founders, and we help connect you to money, markets, and mentors. I will not get into the full details of what we offer, but at the end of the day, there's a link that I have shared on the chat that you can click in and get to discover which are the different products or areas you can come into so that we are able to work with you throughout this journey. So once you get into the Founders Network, there are other programs within it that include the Founders Profit Academy, the Catalyst, business dialogues for those who want to communicate better. And for that to happen, kindly please make sure you fill in that form. Let us get your details. We will be able to reach out to you and follow up and have that discussion that to see what you're coming in as. We also have our contact there on the screen. So you can also be able to reach out to us at hello@smefoundersassociation.com or www.smefoundersassociation.com. Those are our numbers there. Let me repost again the card that you need to fill in so that we can be able to reach out. Otherwise, thank you so much for all those who were able to attend. Tell a friend to tell a friend about SME Founders, and kindly reach out, look out for our next session on corporate governance. So as we log out, I am repasting this link again. Kindly be able to fill that up and let us get to know you. Otherwise, from here today, unless there's any other question, for me, it's bye-bye. Thank you so much, Austin. We are glad to have heard from you from the past weeks, and we'll still be looking forward to the other sessions. So for now, it's over and out. Asanteni sana. Asanteni sana, and kindly please let us reach out and continue growing. Thank you, everybody. Thank you. Thank you. Thank you very much. Thank you very much. Okay, kwaherini. That's the end of it.